Good morning, and welcome to the Leap Podcast, your concise, level headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, the 30th of January, 2026. The macro environment remains challenging, with the Federal Reserve's hawkish stance and looming government funding risk adding layers of uncertainty to risk assets, including crypto. Despite this, institutional and regulatory developments continue to signal long-term structural support. Let's leap in. A major headwind this week was the Fed's January 27-28 meeting, where rates were held steady with no near-term cuts signaled. Minneapolis Fed President Kashkari emphasized it's way too soon for easing, fully reversing earlier market hopes for early 2026 relief. Further down, Powell's term ends in May, with BlackRock's Rieder emerging as a potential successor and who is openly pro-crypto and a proponent of Bitcoin as new gold for portfolios. This could represent a pivotal shift in Fed crypto policy down the line, though the current tight stance, combined with geopolitical stress and oil's rally, continues pressuring risk on assets towards traditional safe havens like gold and silver. Compounding the noise is the risk of a partial US government shutdown starting 31st of January if no funding deal is reached for key agencies including the Department of Homeland Security. Negotiations between Trump and Democrats show progress, potentially averting or limiting the disruption to days or weeks, but the uncertainty from Fed hawkishness and lingering macro geopolitical tensions keeps volatility elevated. Markets typically price in shutdown risk aggressively before relief rallies on resolution, but the environment offers little margin for error. Bitcoin trading around 84,000, down 6% week over week, hitting lows near 83K, the weakest since late November 2025. The pullback flushed leverage with 105 million in long liquidations and modest ETF outflows of 19.6 million. A bright spot. The US Senate Agriculture Committee passed crypto market structure legislation on the 29th of January, advancing the Commodity Futures Trading Commission, or the CFTC's, primary authority over digital commodities, including Bitcoin and many other tokens, potentially clarifying regulation away from SEC oversight. This is a meaningful regulatory tailwind, though near-term macro pressure dominates. Corporate conviction, however, persists. Companies like Strategy added 2,932 BTC and Tesla maintained its full 1 billion position through quarter 4. Structural demand from long-term holders buffers downside, but realized losses on shorter-term positions add caution. Ethereum at $2,800 down 7% week over week, is testing lower supports amid broader weakness. ETF outflows were notable at 63.6 million on January the 27th, reflecting whiplash from macro risk of flows. Despite this, Ethereum staking and tokenization infrastructure remain robust, with ongoing progress in stablecoins and institutional integrations providing underlying floors. Solana, around $117, down 6.5% week over week, but holding relative resilience. ETFs continue positive momentum, with 15.8 million inflows over the past 7 days, underscoring accelerating institutional adoption. Amid the broader market pullback, Solana has been one of the stronger performing major tokens, with ongoing network usage and ecosystem activity attracting selective interest, despite choppy conditions. Broader context from Davos 2026 lingers positively. White House crypto advisor Patrick Witt described it as a turning point for global crypto normalization, with institutional narratives turning bullish on adoption acceleration, even during a safe haven rotation into gold and silver. In summary, Trump's Greenland related de escalation earlier helped, but new layers like shutdown risk and oil strength keep sentiment guarded. Fed hawkishness, shutdown uncertainty, risk off flows is a grinding macro reset with hostile near term conditions but regulatory progress. Corporate accumulation and institutional tailwinds are pointing to long term durability. Amid ongoing macro pressure, relative resilience in Solana and Bitcoin fundamentals has been notable. Volatility remains elevated while markets await clearer Fed guidance or resolution of US shutdown risk. Any improvement in macro clarity has historically coincided with renewed interest in larger, more established assets. Remain calm, stay informed. That concludes your market update for the 30th of January 2026. See YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.